Hi, this is David Roberts with Roberts Business Services, and I'm here to talk to you about some of the common mistakes that people make in QuickBooks. And this is something that leads to quite a few problems, so let's get started. Right here is the workflow that you see on the main screen when you open up your QuickBooks file. Up at the top here, we have everything that has to do with vendors. In the middle, everything to do with customers, and down below, everything to do with employees. Now, what a lot of people do is they click on the enter bill so that when they receive a bill in the mail, they enter in all the information into QuickBooks, and they open up this screen. They put in the amount and what it's for, but that's not the problem. The problem is when it comes time to pay for the bill, they skip this line right altogether. If you're going to enter bills into QuickBooks with this button, then you have to pay them with this button. And what a lot of people do is they skip from entering bills to writing a check for it, and they never click on pay bills. If we click on pay bills, we'll see this right here. These are a list of these fake bills in here in this fake account that need to be paid. If you just write a check for it, QuickBooks does not know that that check that you're writing to Chris Markley for $12 is for this bill unless you tell QuickBooks that it is for the bill. So this will remain on here until you click Pay Bill. Unfortunately, people don't realize this mistake until the end of a month, 3 months, 7 years, or longer. And what they end up with is they end up with an accounts payable that is grossly overstated because they never clicked on pay bills. All right, what's going on here? When you enter a bill, QuickBooks will automatically put that amount into an invisible shoebox right here, an invisible box that QuickBooks calls accounts payable. It's right here. You see it? No, you don't, because it's invisible. Anyway, it's literally like when you, before there was QuickBooks, before there was computers and anything else, when you received a bill, you put it in a box. You only took it out of the box when you were going to pay the bill. But with QuickBooks, it allows you to create the bill and pay it without ever putting in that you've paid it in QuickBooks. You've got to do that. On the flip side, with customers, a lot of people create an invoice and they skip this section right here, receive payments. What this does is you create an invoice for a customer. QuickBooks automatically puts that amount in this invisible box right here called accounts receivable. If you don't take the amount out of the accounts receivable with receive payments and then record the deposit, it stays in there as an unpaid invoice. So what are they doing? They're creating the invoice, and then they're just making a deposit into the bank account with the record deposits button. But according to QuickBooks, you haven't received the payment. So that payment goes somewhere in the ether in your company file and you don't know where. Now, if you assign that payment with that customer, even if you do that in the record deposits, it doesn't change this, the receive payments button, because according to QuickBooks, that invoice has not been paid, even if you record a deposit from that customer. So you've got to respect the invisible box here, accounts receivable. But there's also a third invisible box between receive payments and record deposits. When you receive a payment from a paid invoice, QuickBooks puts that into an invisible box called undeposited funds. What undeposited funds is that's kind of like the till where you kept all the cash and checks and everything until the end of the day, and then you took it to the bank to make the deposit. Because what happens is you've got 15 to 20 different cash transactions. Someone who purchased something from you in cash. You've got 20 checks. You've got a mishmash, really, of all the different kinds of deposits. And all of those are going to total together for one bulk amount. Now, when you get your bank statement, all you're going to receive on that bank statement is whatever the bulk amount is. So if you are not recording your deposits with the Record Deposits button and you're recording them all individually per each individual transaction, you're going to have to figure out when you're doing the reconciliation which of these transactions that I deposited add up to this bulk total. And that's one of the reasons that you really should be using the flow chart and making it easier on yourself in the long run. There are 3 things that you really never want to do in QuickBooks. 3 accounts you never want to use. Accounts payable, you do not want to enter that into a bill, because when you pay a bill and put accounts payable as the account, it's just going to duplicate itself in that account. And yes, it happens all the time, so you're not alone. Don't worry about it. The other one you don't want to use is accounts receivable. You don't ever want to enter in a deposit from accounts receivable into the account line, because QuickBooks does that automatically when you move it from receive payments to record deposits. Okay? And you never want to use undeposited funds as an account. Now, your accountant or bookkeeper may use those accounts to make adjustments where adjustments are due, but please don't use those accounts in a typical transaction, because it gets to be a real mess. All right, thank you very much. This has been David Roberts, Common Mistakes in QuickBooks. If you need my services, I'm available locally in the Central Florida area, and I'm also available online as an online consultant for QuickBooks Desktop or QuickBooks Online. So call the number on your screen, and I'll be happy to help you out. Thank you.